What's up everybody, Emmanuel from Wyze.trading here. Obviously from the description of the title, we are going to be talking about risk management today. In this video, I'm going to be explaining to you why your risk management or normal risk management setup without these parameters is a lie. Your actual 2 to 5 risk to reward, 3 risk to reward is not a true 2 or 3 risk to reward. This is probably the reason why you're not profitable, why you get mad saying the market is against you, and you don't understand why you're unprofitable with a 2.5 risk to reward or greater. In my personal opinion, it all comes down to volume and edge in the market. General edge through technical analysis, whether you get this from price action, order flow, supply and demand, support and resistance. You always need volume to aid your confluence in the market. So for me personally, my edge in the market comes from my technical analysis. Any trader that trades off of technical analysis in itself, that's where your edge lays. Now, one of the simple fix is just trading in edge itself. I've always had great technical analysis skills, but I never traded in the actual edge. I could never wait for the market. I've always had FOMO whenever the market was moving. I wanted to be in the market trading the second the bell rung at 9:30 a.m. I want to be out of the market as quick as possible. Doing this most of the time, I was not trading inside edge. If you are not trading inside edge, you might as well go to the casino and use that money there, because trading outside of edge does not give you a true risk to reward that you think you're putting on in the trade coming from your stop loss and your take profit. As I stated, edge lays for me in the zones that I create that I deem the market will move drastically from that position. To do something like this, you need volatility in the market, and that comes from volume. Now, if we're in a choppy day, for example, where the market is range bound, our quality of trades will be less likely to pan out. There's going to be a lot more chop in the market. So why take on more trades, or why trade at all? Where can we deem that edge is present? And if we don't have edge, why enter a position? If we know in that aspect that we don't have edge, or our probability of trading or making a successful trade in our market theory is less, why are we risking our hard-earned money hopping in the market for a possible chance that is a lot less than if we were in edge or in a market scenario that we know our technical analysis and our edge is more likely to pan out in our favor? So with all this information I'm giving you, we're going to go to the screens now and break this down. All right, so like I stated before, we're going to start with edge. For a true risk to reward to work, we need a high volume area where the market's not ranging back and forth. This is where our edge is present. This is the number one thing that makes a good risk to reward. Your edge is backed by your back testing and your journaling, proving that your strategy, your technical analysis strategy, works majority of the time, and backing money behind it will make you profitable. Now, once we're in edge, we need confluences in the market to support our market theory. Once we deem edge is present, for example, in this demand zone right here, as you can see, we make a demand zone in here. We come to these key areas, we bounce off of it, and then every time we fill orders or we touch this demand zone, we have a nice rip up. Along with this, we're going to need 2 to 3 confluences in the market to support our theory. This will make the probability of our trade to hit our take profit, aka deeming our market thesis valid, rather than hitting stop loss, deeming thesis invalid. So the quality of the trade would be better, and there's a greater chance of it working in our favor. The biggest confluence I use is volume. For example, right here, every time we hit this demand zone, it gets soaked up and we move to the next area of interest. This area of interest was used as a pivot point various times. You can see all through here, a lot of volume created through here, a lot of pain. As you can see on the last strike after this demand zone, we held it perfectly to the tick, and then we got that nice rally. Our second area of interest over here, we see we had a little bit of fight, and then we deemed the resistance support again, and then support again in here for the nice move up to supply every single time. Again, all these points of interest, these pivot points between supply and demand zones, that's where my edge lays. I mark this out every day pre-market for all the members. Create your own edge, use my edge, use me as a confluence, whatever it's going to be. You need edge and confluence in the market to make a good trade. After this, the last struggle, besides psychology, is entries. A lot of traders struggle. They have good theories, they have good edge, but they mess up their entries or they have poor entries. And without deeming their true trade or their true theory of the market invalid, they get stopped out because of this. Getting a good entry is absolutely critical, especially as a scalper. Or an intraday trader, we generally have a small stop loss. We need the best entry possible. I know it's happened to you, it's definitely happened to me, where we enter a position, we get stopped out by 1 or 2 ticks, and then the market rallies to our favor, and we would have had an insane banger trade. Now, stating this with entries, I want to show you guys an example that I have not seen anyone show or mention for entries. Our chances would be about 50-50 in the middle of the candle considering chop. Now this 50-50 chance is deeming that our risk to reward is a 1.0. Now in chop, the greater our risk to reward is, the less likely our trade will work out. Because as we're range bounding 10, 20 points, whatever it's going to be, the chances of hitting our stop loss, now that is 10 points, 15 points, even 8 points, is going to be a lot greater since we're going back and forth rather than hitting our take profit, which is 20, 30, 40, maybe 100 points away. So if we're trading in chop, the chances of the market coming back to our stop loss or touching that before making the actual big move itself is so much greater than an actual 50-50. That is why most traders lose, because they don't understand that they're trading in chop and they're in theory becoming liquidity before the trade or the market even actually moves. Now, the simplest way to try to mitigate this, depending on how you trade obviously, is getting in on the opposing side of the candle or the opposing side of balance range. As long as there's volume proving present, and you can either find close to that wedge break and give yourself some cushion room, as long as getting in on this opposing side does not invalidate our theory of the market, this can give you an extra, like I said, either cushion room to make your stop loss larger, looking for the bigger move and make your take profit larger, or it can give you a smaller stop loss if market theory is going to stay the same and you just get a better entry price. Now, this is 100% easier said than done. Most traders will not get in on the opposing side of a candle in consideration of chop. It's natural to expect a breakout along with FOMO coming into there and chase the candle, which brings them to a worse entry price than intended and even less favorable odds than what we started with. As you can see on these high volume areas, I wouldn't consider this because this is news, but just anywhere in here, or looking to short the opposing side of this before the actual break itself, you're going to get better entry prices on the top end looking to short and on the bottom end looking to long as market theory is considered still valid. Again, market theory over here on the opposing side, on the bottom side, even if this candle is green right here, for example, you want to try to follow volume times in sales to get this better entry price in here, whether it's going to be, 5, 6 points. Like I said, you can either make the stop loss greater by that much, or you can have a tighter stop loss if you don't want to give the trade that much breathing room, if it validates your theory of the market. Again, these are all personal preference things. This is stuff that's going to take time. This is stuff that you're going to have to train yourself to enter. You're going to have to train yourself to see these volumes. You're going to have to train yourself to see high volume areas and high volume coming in, whether it's through an order flow tool like book maps, footprint charts, the DOM, or the simplest and the best way to get started is times and sales. Now, like I said, this is never mentioned in risk management for some reason, and traders are running back and forth losing money for simple mistakes like this. Now, like I said, a simple switch, whether it's going to be entering on the opposing side, put your entry where your stop loss would be. Little tricks like that can help you fine-tune your trading that will support your market theory, give you better entries, take less risk, take less trades. The list just goes on and on bettering yourself, just understanding just to simply trade an edge, use volume. And maybe if you're at that last step, like I said, where you have the edge, to work on your entry price. Like I stated before, now we start to add the confluences in the market, which will give her a higher percent trade that our theory is correct. And then the icing on the cake is just sniping those entries. Like I said, depending on chop, depending on volume, inside days, outside days, even news, there's so many different catalysts that's going to make the market change just so slightly or even drastically in the moment. That's why you have to personally play with it and tweak it to your own liking and your own trading style. Even if I teach you everything from A through Z, your trading style will always be a tad different than mine, and same thing through the next one and the next guy. That is why screen time is also important. As always, thank you for watching. I hope this video helps you out. Check out all the other videos I have for tips and tricks, and check out the description for my Discord and my website.